GameStop and the 5 tips that you should do to avoid trading losses. Okay, so we're going to go ahead and jump in and talk about GameStop. It was an interesting situation with them, but to make things simple is a group on Reddit saw that a stock has been shorted heavily by hedge fund managers in Wall Street, so they gathered a pretty large group on Reddit to plan a time to send this stock to the moon and hold it. And what that does is for the people who have been hedging and shorting this stock is it causes them to lose a lot of money because they're betting on contracts, on options contracts, put option contracts, and also shorting the stock by buying shares and then selling them. I'm still kind of rusty on my shorting. I don't know how to explain that well, so basically they lose money when the stock goes up, and they sent GameStop to like $500, $300 to $400, and it was at like $2. So it was crazy how much they lost. From what I heard, they lost about 80 billion, and probably some more. So yeah, that's kind of what happened with them. And the main goal of that wasn't to just make a profit, but to really teach the top ones who are controlling the market, to teach them a lesson. And the lesson is to stop, manipulating the news, manipulating just everything to get what they want. Since they own everything up there, they can just write an article and say a JP Morgan analysis says the stock is worth this much, and then it starts pumping it up. So that's my opinion on it. Please comment down below. I want to hear y'all's opinion on GameStop, what you think. I think it should be an open discussion. Don't take my word for it. Just, hey, this is what it's an open discussion about GameStop. Number 1, read and watch trading fails. Well, I definitely can take part in this because I did buy GameStop at 260 to help hold the line. I did lose money because obviously it is going to go down. The fundamental value of GameStop's like $30 or $40, definitely not 260. So yeah, that's a trading fail right there, but it's also a good lesson. So read and watch trading fails. You can learn from mine. I've definitely messed up on Robinhood. I'm going to show you guys some of my trading issues I've done on that. And then also on YouTube, you can just watch videos of people explaining their failures, and you can learn a lot from that. So definitely recommend reading and watching trading fails. I don't know why I do this. I always get hungry before I film. Terrible idea. Number 2 is research your hat off. That basically means what it says. Research a lot. You can watch educational YouTube videos, read articles, blogs. I have my website, Natural Blue Trades, in nitrofinance.com. You can go check those out. They're still new, so there's not a lot of content on the second one, Natural Finance, but that should get you something going. Also, listen to podcasts. A good podcast I recommend is the Rich Dad Radio Show. That is a really good podcast. Definitely you can learn a ton off of his show. So yeah, keep researching. Good websites to go to is Investopedia, MarketWatch, TD Ameritrade. You can learn a lot. That would save you a lot of time wasted on YouTube trying to figure out and understand stocks because it's all organized there. Alright, number 3, buy on fear, sell on greed. This inspired me from Warren Buffett. He said to be fearful when others are greedy and greedy when others are fearful. So to apply this method would mean if the markets are down a lot and people are just selling, freaking out, they think everything's going to crash, that'd probably be a good time to buy because that's when everything is cheaper. You don't want to be buying when a stock is already pumped up like 5 or 10%. So if that's what it means to buy in fear, and then to sell in greed is what it means, sell in greed. So if the stock is like soaring 10, 20% and it just keeps going up and up and up, at some point I recommend, and what I've heard other people say, is take your profits when you see them. So yeah, definitely you don't want to be greedy. Sell on greed, buy on fear. Very important thing to remember and just get in your mind. Okay, so to explain principle 3 better, I actually drew a very basic line chart of what I'm meaning to buy on fear, sell on greed. So if you have a stock that XYZ is going up
and it's just kind of going and going and going, and it's just going up. A lot of people they FOMO, and that basically means fear of missing out. And that is when they start buying in and pouring in. And they usually, if they're an inexperienced investor or trader, they buy right at the peak and right up here. And then they don't see that the thing needs to correct, the stock needs to correct, so it just drops down. Either it does a drop like this because of earnings or whatever the news is, and they're not getting a contract, and it just drops. Well, if you buy up here, you're first off buying on greed, and it's going to take a long time for you to recover to where you're at, because it's going to take a while for the stock to get back. So when a stock is like this, you're going to want to analyze it and look and see where it's going. And the best thing to do is sell, I would say right here or a little bit closer, but take your profits when you see them. You can always get back into the stock later, but the worst thing to do is to get stuck at the top and then take a while for it to come back. So you want to sell here, and you're going to want to buy right around here. It's not going to look, all nice and pretty and perfect for you. It's not, but you can usually decide, all right, it went up, it corrected down 10% or 20%. If you believe in the company, you could pour in and buy now, and then once it goes back up, you would make a good sizable profit off of that. So that explains the principle: buy on fear, sell on greed.
Number 4 would be choose your broker wisely. This is extremely important. You want to make sure that they are trustable, they have good reputation. Are their reviews positive? Are they negative? Are they, I said yay or nay, are they good or bad? Easy to use. Do they have an easy to use app or website? That's something that's huge. On Robinhood, I like the app. But then when markets get volatile, what happens? It doesn't work. So that to me doesn't say that it's reliable. I'd go and use Fidelity, because I know they're going to work when the markets are going crazy, and no matter what. So do they have hidden evil fees? No one likes fees. I hate fees. That's something very important to watch out for. Just like on an exchange I'm using for crypto, which is Uphold, there's a lot of fees that you have to pay when you're trying to convert a cryptocurrency like XRP into USD or to XLM. I don't like that, but that's how it is with them. So watch out for hidden evil fees. Robinhood has fees. A lot of companies do. On your credit card, there can be many fees. Recently, I got hit with a fee from Chase Bank because I didn't have funds in my account, and I didn't get the funds in there fast enough, so they charged me $34. Now, that was very annoying, and I learned, so definitely watch out for hidden fees. Alright, number 5, we're going to be talking about stopping your losses. So what this basically means is, if when you enter a trade, whether it's an option, whether it's a forex trading pair, anything, if it's a trade, use these tools. You have a limit order that basically allows you to set the limit price that you want to buy a stock at, or the options contract. Definitely don't use a market order. If you're using a market order, you must really know what you're doing, and you're just trying to get in, or you don't, and you're just using a market order. So avoid that and use a limit order. I don't know all of these, but I wrote some of them down. So you got a trailing stop, you have a stop limit, you have a GTC, that means good till cancel. So if you place a limit order to buy a stock at $2, that order is not going to cancel because you set a GTC, a good till canceled order. Another one is AON. That's some of these are on more advanced brokerages. So you have an AON, that's all or none. I have not actually used that, and I have not used an IOC. That is immediate or canceled. So these are for more advanced trading down the road when you get more advanced. But definitely use a limit order when you're trying to buy anything. You don't want to be paying overpriced for your trades. Trailing stop is really good. You can do trailing stop to buy or to sell, and you also have a stop limit. So those are just to kind of get your feet wet, throw some good tools at you and to get you going. So check out Investopedia. They have a lot of these on there, and you can read each one. Also, check out Nitro Blue Trades. We got some articles on there. I'm going to be adding more, and yeah, we're going to get you guys going. More videos are going to be coming soon. I'm going to focus the next ones a little bit more on stocks, but mostly I'm going to transition to crypto because that's where I really feel like I'm doing better in. Stocks were great, but from trading for 2 years, I like crypto better. There's more potential for me in that sector. So if you guys like this video, please leave a comment, like, and definitely subscribe to the channel, and we'll see you on the next one.